Unlocking Wealth, the Power of Long-Term Investing. Welcome to The Wealth Dynasty Report, the podcast dedicated to demystifying the world of finance and helping you build a stronger financial future. Today, we're diving deep into a cornerstone of successful investing, long-term investing, and how fundamental analysis forms its very foundation. In a world often obsessed with quick wins and instant gratification, the idea of long-term investing might seem a bit, old-fashioned. But believe me, it's a timeless strategy that has consistently proven its power to build substantial wealth over time. So, what exactly is long-term investing? Simply put, it's the strategy of holding investments for an extended period, typically several years, often even decades. Unlike short-term trading, which seeks to profit from rapid price movements, long-term investing focuses on the underlying value and growth potential of a business or asset. Think of it this way. When you buy a stock as a long-term investor, you're not just buying a ticker symbol. You're buying a small piece of a real business. You become a part owner, and your success is tied to the success of that business over time. This brings us to the core philosophy behind long-term investing. It's rooted in patience, discipline, and a deep understanding of what you own. One of the most influential figures in this philosophy is Benjamin Graham, often called the father of value investing, and his most famous student, Warren Buffett. Their approach emphasizes buying assets when their market price is significantly below their intrinsic value. Intrinsic value is the true worth of a company based on its assets, earnings, cash flow, and future prospects, rather than just its fluctuating stock price. This is where fundamental analysis comes in. Fundamental analysis is the process of evaluating a security's intrinsic value by examining related economic, industry, and company-specific factors. It involves scrutinizing financial statements, assessing management quality, understanding competitive advantages, and analyzing industry trends. It's about doing your homework, understanding the business model, and ensuring the company has strong fundamentals that will support its growth over the long haul. It's not about guessing where the stock price will go next week. It's about understanding where the business itself is likely to be in 5 or 10 years. Another key pillar of long-term investing philosophy is the incredible power of compounding. Albert Einstein reputedly called compounding the eighth wonder of the world, and for good reason. Compounding is simply earning returns on your initial investment, plus the accumulated interest or returns from previous periods. Imagine you invest $1,000 and earn 10%. You now have $1,100. If you reinvest that $1,100 and earn 10% again, you're earning 10% on a larger sum. Over decades, this snowball effect can turn modest sums into substantial wealth. A crucial aspect of this philosophy is how long-term investors view market volatility. While short-term traders might see market downturns as a reason to panic, long-term investors often view them as opportunities. As Warren Buffett famously said, "Be fearful when others are greedy, and greedy when others are fearful." A market dip can be a chance to buy quality assets at a discount, much like a sale at your favorite store. This requires emotional discipline. The stock market is a powerful wealth-building machine, but it's also a powerful emotional roller coaster. Long-term investors learn to filter out the daily noise, resist the urge to react to every headline, and stick to their well-researched plan. So, with this philosophy in mind, what are the tangible benefits of embracing long-term investing? Firstly, and perhaps most appealingly for many, is reduced stress and time commitment. You're not glued to your screen, constantly checking stock prices or worrying about daily fluctuations.
Once you've done your fundamental analysis and made a sound investment, you can let time and compounding do the heavy lifting. Secondly, tax efficiency. In many jurisdictions, long-term capital gains, profits from investments held for over a year, are taxed at a lower rate than short-term gains, which can significantly impact your net returns over time. Third, and we can't emphasize this enough, is the sheer power of compounding returns. We discussed it as a philosophy, but it's also a massive practical benefit. Even small, consistent investments, given enough time, can grow into substantial sums due to this exponential growth. Fourth, and protection against market noise. The financial media is constantly buzzing with predictions, hot tips, and sensational headlines. For a long-term investor, most of this is irrelevant. You're focused on the underlying business, not the daily chatter. And finally, alignment with real economic growth. When you invest long-term in well-run businesses, you are participating and benefiting from the overall growth and innovation of the economy. You're not speculating, you're investing in progress. Now, a quick word on common pitfalls to avoid. The biggest mistake for aspiring long-term investors is often short-term thinking. Don't chase fads or get caught up in speculative bubbles. Stick to your fundamental analysis. Another pitfall is emotional decision-making. Don't panic sell during downturns, and don't get overly confident and reckless during boom times. Discipline is paramount. And remember, while fundamental analysis guides your choices, diversification is still crucial. Don't put all your eggs in one basket, no matter how good that basket looks. In conclusion, long-term investing, grounded in thorough fundamental analysis, is not a get-rich-quick scheme. It's a get-rich-slowly scheme, but one that is far more reliable and less stressful than trying to time the market. It requires patience, research, and emotional fortitude, but the rewards, in terms of wealth creation and peace of mind, are immense. Start by understanding the businesses you're interested in, focus on their intrinsic value, and let time be your greatest ally. Thank you for joining us on Invest Insights. Until next time, happy investing.